afternoon, everybody. I'm Jerry D'Ambrosio. Welcome to today's webinar, 3 techniques to help you capture trades of a lifetime. Happy Friday to everybody. Hope everybody's doing well. I want to do a quick sound check just to make sure everybody can hear me okay. If you guys don't mind, those of you that are using GoToMeeting, just type in anything that will let me know that you can hear me. There we go. Ali says yes. Gary says, hear you well. Fantastic. Nancy says, hello from Cleveland. Hello, Nancy. I do want to welcome everybody joining us via YouTube as well. So hope everybody's doing well. I see a lot of familiar names of folks that come to our various webinars, whether it be coaching sessions or free content. It's great to see a lot of familiar names in here today. I do want to let you guys know that Ray Clark is in the background. He'll be answering any questions that you guys have along the way. So what I like to do is save some of the more common questions to the end because I have so much content to cover here. Within the next hour, we're going to be together for about an hour or so. If you have a question, feel free to shoot it in the chat box. Ray will be there to answer it. If I feel it's really pertinent to the topic at hand, I will answer that question for sure. But again, I'll save some time at the very end to answer some of the more common ones. Okay? So my promise to you is that by learning what I'll show you today, you'll see how you can use technical indicators to anticipate what is likely to happen in the future. And the key word there is anticipate. Nothing that we do at VectorVest, technical analysis, none of that predicts what's going to happen in the future. We don't know what's going to happen in the future, obviously, but technical analysis can give us an idea of a few things. It can give us an idea of potential change in trend. It allows us to identify overbought, oversold price situations that we may not be able to recognize with the naked eye. So technical analysis really gives us some insight into potential future price performance. Okay. Now I do want you to stick with me to the end. If you guys stay with me to the end, I will share with you a copy of today's slides. Just somebody remind me. I occasionally forget, but about, let's see, 2 o'clock, 2:50 Eastern time, 50 minutes from now, I'll be wrapping things up and just say, hey Jerry, don't forget the slides, and I will put them in the handout section of your GoToMeeting control panel. Okay, just so again, somebody remind me at the very end. So I've been with VectorVest now 14 years, worked with a lot of traders and investors over the years, and they let me know some of the problems that they have. I ask, but they let me know some of the problems that they have when it comes to finding their trades and using technical indicators in general for trading. They feel like it's a crapshoot, especially with the market being so up and down. I mean, the last month or so has been quite volatile, right? A lot of traders feel like it's just a crapshoot. They don't know, they can't really get a sense of direction. Market turns on a dime, so they just feel like they're behind the 8 ball a little bit when it comes to using technical analysis for trading. This is a big part of their frustrations and some of the problems. They just don't feel like they know everything when it comes to trading, so they avoid it. They say that there's just too many indicators, all these funky names, right? So they say, forget it. I'm just going to stick with what I know, what I'm good at, fundamental valuation, a little bit more buy and hold, as opposed to swing trading where you're a little bit more active. You buy a stock, you hold on to it for a couple of days, maybe a couple of weeks, as opposed to investments where it's months and years. Plus, when they do decide to get into technical analysis and a little bit of shorter term trading, they're going through too many charts. They're spending all their time going through graphs. I've spoken to people who go through hundreds of charts in a day. If you do that for too long, imagine doing that every single day. It's going to be very, very frustrating. Okay? You're going to give up. You don't want to spend all your time going through chart after chart and maybe not to find any candidates at all. So what we want to do is we want to put probability on our side. You don't want it to be a crapshoot anymore. All right, you want to stack the deck in your favor. You want to know what you're doing. Confidence is a big part of trading. while you might not know everything about everything, and what I mean by that is you're not going to know every single technical analysis indicator in the book right away. You'll know exactly what you need to know to be successful. Plus, you want to find trades quickly instead of looking at hundreds and hundreds of charts. So the thing I've discovered over the years is that there are three areas that traders need to focus on to be successful. The first is when. Um, if the last year has taught us anything, there are different types of market situations, right, that we need to understand. Now, granted, there are different types of market situations that we need to understand, and then which indicator to use in that situation. Now, granted, there will be special situations and times where we might mix and match, but we're going to talk about the main ones. So you need to know what types of markets there are and how to identify them, and which indicator to use in that market. Um, and again, there are dozens and dozens and dozens of technical indicators. But if you can focus on a few at first and then work from there, it will help you tremendously. And then finally, how am I going to find my trades, right? So if I understand what the market's doing, and we're going to go through the different types of markets that you will encounter, which indicator is ideally suited for that market, and then how am I going to find my trades? So this webinar is called Three Techniques. Each section is going to have three areas. Okay, so the first thing you need to understand is when to use the indicators. There are three main types of market situations that we need to talk about. The market can do one of three things. It can trend, right? This is a really comfortable environment for everybody. Traders love it. Investors love it. Everybody loves a nice trending market, right? Higher highs and higher lows, not a ton of volatility. Again, this is a really, really comfortable environment to be investing in. Then there are times where the market no longer trends, right? It moves in a channel. It's known as a trader's market. Investors hate this market, this type of market. Traders, they don't mind it. They understand how to take advantage of it because of the nature of what they're trying to do, right? They're okay with getting in and out quickly and playing the up and down moves very, very, with very, keen awareness of when those moves might take place. And then there's finally a situation where, and we just actually came out of this situation recently, where the market can hit an extremely oversold level, and we're searching at that point for a bottom. We start to search for a bottom, and there are indicators within the VectorVest program that I'll talk about how we in a moment, where we are able to identify extremely oversold situations. So this is what a trending market looks like. We're looking at February of 2017 to basically January of 2018. Don't worry about the time frame. It's what we're looking at here is important, right? This is a trending market. Okay, higher highs and higher lows. The rallies are longer, the pullbacks are shorter. Right, so this is a nice uptrending market. I said earlier that traders love it, investors love it. We all love this type of market. So what our job is as a trader, okay? Now, if you're an investor, it's a different approach, because if you're an investor in a nice uptrending market, it's basically just buy and ride, right? Buy and hold. Within the VectorVest program, there likely aren't going to be any market timing signals that'll get you out of the market during this type of market, really. It's a nice uptrending environment, not a lot of volatility. Many of the stops that you're using for these core long-term investments aren't being hit because, again, you're in a nice uptrending environment. Now, if you're a trader, it's a little different. So as a trader, what we want to do is we want to be bullish only, meaning we buy stocks or add to our existing positions after each subsequent high or low. We buy the dips, right? We don't become bearish after each new high. We become defensive after each new high, meaning we look to take gains off the table. we look to tighten up our stop criteria at the very least. But we don't look to short stocks because, again, you're in an uptrending market. Those pullbacks are short-lived. Now, there will be some times here where, okay, you probably say, well, if I would have shorted stocks off of this recent high, I probably could have made some money there. You probably could have, but we're not interested in it probably. And we're not interested in, every once in a while being successful. We want to be consistent. And we found that if you are focusing on being bullish only in an uptrending market, you will be consistent over time. Okay, now you want to be bearish only in a downtrending market. Okay, that'll if you do short stocks. Okay, so that's a trending market. We want to be bullish. We want to buy the dips after each subsequent higher low. Now this is 2018, so 2017 is over. And clearly, we're not trending anymore, right? This is I'm sorry, by the way, this is what's called the VectorVest composite. Those of you that might not be a VectorVest subscriber, you're familiar with the S&P, the Dow, the NASDAQ. Those are broad market indices. This is our broad market index. This is VectorVest broad market index. It's called the VVC, stands for the VectorVest composite. It tracks 8,000 stocks. It doesn't just track 50 or 30 or a couple thousand. It tracks 8,000. So we feel it's a better representation of the broad market because it tracks so many stocks. Now, so here we're in 2018. How do I know the market's not trending anymore? How do I know that it's in a trader's environment and a channeling environment? Well, it's no longer hitting higher highs. However, it's not hitting lower lows either. Okay? Essentially, it's channeling. Moving back and forth, up and down between support and resistance. Now, if you're an investor, you're very frustrated because the average portfolio is kind of doing the same thing, right? If you're an average stock picker, you might be a little bit above average, but you're not making the money that you're hoping to make and that you do make in an uptrending market in this type of an environment. But traders love it. They recognize that the market's moving sideways. They become bullish at support. They become bearish at resistance, and they bounce back and forth and alternate long and short positions off of those retracements. Okay, then finally, the market can hit extremely oversold situations, like it did back in December of 2018, like it did in March of this year, like it just recently did a few weeks back, and we have two indicators within the VectorVest program, one called the MTI, the other called the buy to sell ratio. The MTI stands for the market timing indicator. It identifies the underlying trend of the market. It's on a 0 to 2 scale. When it's above 1, the underlying trend is up. When it's below 1, the underlying trend is down. But when it gets below 0.60, we feel the market's extremely oversold. And we start to search for a bottom, and we kind of know, listen, we don't necessarily want to or focus on buying at the exact bottom. For example, this red candle here, that's not where we're looking to enter back into the market. Okay, I don't even know if you can do that. You might get lucky doing it, but that's not what we want to do. We want to wait for the market to stop going down and start going back up. So when the MTI gets to 0.60, and another indicator, another market timing indicator that we have called the buy to sell ratio gets below 0.20, we know, boy, the market's really oversold. We're searching for a bottom. We wait for the explosive rally. And that happened in this case the day after Christmas. The VVC formed a one white soldier. That's a bullish reversal pattern. You had follow through the next day. We're okay with getting in a day or two off of the bottom. Okay, we're not trying to catch the bottom. I think that's very hard to do. But what we do more often than not is we call the bottom a day or two off of it. Okay, which I don't know if anybody, other services are able to do that. Okay, so that's an extremely oversold situation. Again, these two indicators help us identify that. Okay, so hopefully you have a better understanding of how to recognize what the market can do. It can trend, and what our jobs are what our job is in a trending market. In an uptrending market, we want to be bullish. We want to buy at each subsequent high or low. We want to buy the dips. We want to become defensive after each higher high by taking gains off the table or tightening up our stops at the very least. Then the market can channel, okay? And how you recognize a channeling market is if it doesn't hit higher highs anymore, right? But it's not hitting lower lows either. So if you're hitting lower highs and lower lows, well, then you're in a downtrending market, right? But if you're hitting lower highs and either higher lows or failing to make new lows, meaning either higher lows or the same level, basically establishing a support level, you're channeling. And then finally, the third market is an extremely oversold situation, and those two indicators help us identify that, okay? So you recognize what the market's doing now. Which indicator are we going to use in a trending market? Well, we're going to use the MACD. And again, I said earlier, there are dozens of indicators, guys, but we're just going to focus on one indicator for each of the three markets. So in a trending market, we're going to use the MACD. MACD stands for Moving Average Convergence Divergence. It's a trend-based indicator that identifies meaningful changes in price trend. It has the words moving average in the indicator. So if you know about moving averages, you know that they are trending indicators, right? They identify true direction. So it just makes sense to us to use a trend indicator in a trending market. So we're going to use the MACD in a trending market when the market's moving sideways and essentially bouncing up and down between support and resistance. We're going to find stocks, we're going to look for stocks that are doing the same thing, that are bouncing up and down between support and resistance. So for example, if the market is retracing from support, right, we're going to look for stocks that are retracing from their own support level. If the market's breaking resistance, which is bullish, we're going to look for stocks that are breaking resistance. And then finally, probably my favorite indicator, I love stochastics, I use it a lot. It identifies overbought or oversold situations. So when the market is an extremely oversold situation, stochastics is a really good indicator to identify stocks that are in a really oversold situation. Okay, so here's Netflix. I've added MACD to the bottom of the chart. And I'm just going to focus, guys, really simply as to how to use the indicator. Don't worry about how the indicator is calculated. If you want to Google MACD, you'll find the calculation and the formula. I'm just going to focus here on how to use the indicator. So real simple application is when the histogram bars, that's these yellow bars at the bottom, when they go from below zero to above zero, that's bullish. That's a buying opportunity. That's an indication of a change in trend. Okay? The bearish signals are when the histogram bars go from above zero to below zero. So those are that's an indication to sell an existing long position or to tighten up your stops at the very least. That's the defensive stance that you want to take when you get a bearish signal. Okay? And we're just going to go through some examples here. And what I really want you to focus on is the behavior of the stock's price as we move forward. What do I mean? I mean, are we in an uptrend? Right? Are we trending? Right? You're in an uptrend. You're hitting higher highs and higher lows. And you'll notice the times here. Let me actually back up. You see a higher high here. You got a pullback and then a rally. So you're saying, well, why don't I buy here? Right? You got a higher low that's being established. Why didn't I buy here? Well, the histogram didn't tell you to buy there, right? The histogram bars stayed negative, so it didn't actually give you a buy signal until here. Again, meaningful change in trend. This wasn't meaningful enough to cause the indicator to change from bearish to bullish. Okay, another new high is established, then a pullback. There's your bearish crossover, good opportunity to take gains. Sit on the sidelines, wait for another bearish crossover. That pivot point there is higher than the previous one, so you're in a nice uptrending environment, and you continue to be in a nice uptrending environment. Now here you're moving sideways, and not every trade that you're going to make, is going to be a winner. So here you might have walked away even, maybe a small little loss, right? Because if you entered it on this bullish crossover, you exited on the bearish crossover right in this area, but you nevertheless exited. You didn't hold on because you're in an uptrend and you think that, we're going to continue to move higher. If you think that and you hold on to the position longer than you should, what happens? You dig yourself into a hole, you don't follow the rules, and look at how long the histogram bars stayed negative there, and you're again digging yourself too deep into a hole when you could have gotten out weeks earlier at a small little loss, taken the remainder of your capital, reinvested into the next position that looks a little bit better. Okay? But time and time again, look, we're not going to catch the bottom with the MACD. Okay? We're not going to catch the bottom. Remember what we need here with this indicator. We need a meaningful change in trend. Okay? And again, what we're looking for are more winning opportunities than losing opportunities. This one probably would have been a losing opportunity, right? You're still in a nice uptrend, higher highs and higher lows. Here you had a bullish MACD signal, but you had a bearish MACD signal right in this area, so maybe a small little loss on that trade. But the key word there is small, right? We're trying to minimize our losses and maximize profits by catching the really big moves. Okay? And in an uptrend, the indicator will do that. It will allow you to catch the really big moves. Now, same stock, now we're into the basically summer of 2018, and we're not trending up anymore, right? We're not uptrending. Well, we were here, we continue to uptrend. Market hit a high, stock hit a high June of 2018, pulled back, hit a higher low, but that rally failed to make a new high, and then we started to enter into a downtrending market. We don't want to be bullish here, okay? We don't want to be bullish in a downtrending environment using the MACD. We want to be bearish only, because if we think that we're catching the bottom, right? You got a pullback here, you got a new low, but you had a rally here, right? And you had a histogram that went from below zero to above zero. So you're thinking, this is it. This is the bottom. I'm going to catch it, and I'm going to ride this baby higher. And then what happens? Stock continues to fall, makes a new low. You think this is it now. All right. Before you thought it was it, but now you really think that this is the bottom. And you buy, and we get another new low. Look, eventually you're going to catch the bottom. But again, we're not trying to do that. We want to be consistent. Okay, we want to be consistent in our selection process, and not just throw darts at the board hoping that eventually we'll catch the bottom. You will, but you're gonna accrue a number of losses along the way. Okay, so in an uptrending market, when you recognize that the market is hitting higher highs and higher lows, we're going to look for stocks that are exhibiting that same type of behavior, and the MACD is a really good indicator for that environment. Another very popular trading technique is to use support and resistance levels. Now, one of the great things about the VectorVest tool is it has a way to automatically draw the support and resistance lines for you. So let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Basically, a support level is a point where stock prices, they stop going down and they begin to go back up. Now, this typically happens on multiple occasions. It's where demand is deemed strong enough to push the price higher, to support it from falling any further. Resistance is a point where stock prices have stopped going up and they begin to come back down. Again, typically this happens multiple times. It's where supply is deemed strong enough to push the price lower, to resist it from rising any further. And support and resistance is the ultimate crowd mentality indicator. So think of it like this. You buy a stock, you watch it go up, right? You watch it go up, you watch it go up. Maybe you bought it here, maybe you bought it here, you watch it go up, but you don't sell it because you think it's going to continue to go up. Then what happens? Boom, crash, right? The stock crashes and you say to yourself, boy, all right, I weathered that storm, I held on for whatever reason, and you say to yourself, well, okay, if it ever gets back up there again, I'm going to sell it. I promise. I'll sell it when it gets back up to the same level where I should have sold it last time, right? Hindsight's 20/20. And then what happens? It gets to that level again, and you and everybody else who bought it back here the first time, you sell it, and that puts tremendous pressure on the stock's price. So how do we use support and resistance in your trading? So let's talk about the two buying opportunities, the two bullish opportunities, or two bullish situations. Bullish situation number one is if price retraces from support, retraces from support, retraces from support. That's bullish. That's a buying opportunity. Okay. Buying opportunity number two is if price breaks out through resistance. Remember, we said that there was built-in selling pressure, right? Around that resistance zone based on the crowd mentality. Well, if a stock's price is able to overcome that selling pressure and bust through that resistance level, particularly on high volume, that's really bullish. And that's another indication to take on a long position. Second, you can also use support and resistance to indicate when to sell an existing position or to initiate a short position. So if you see price hitting resistance and coming back down, that's bearish. Typically, price is going to continue to fall to at least the next support level most times. So if it's a trade that you're in, if it's a long position that you're in, you should consider taking defensive actions when price retraces from resistance. Tighten up your stops, take the whole trade off, sell half. Those type of defensive actions. Additionally, if you see price breaking down through support, breaking down through that floor, that's bearish as well. So if you are still long a position and price breaks down through support, you should consider selling it. Not taking half off. So there's a difference between a resistance retracement and a support breakdown, right? Because if you bought off of a support retracement and you reach resistance and let's say you took half off and you got a pullback off of resistance, the least you can do is move your stop on the remainder of the position back up to entry where you don't lose any money on the trade. Right? If you take half off when the stock breaks down through support, well, you're just riding the rest of it, riding the rest of the trade deeper and deeper into a losing situation, right? Because you're likely below your stop loss. Okay, because again, if you entered off of a support retracement, your stop is somewhere near support. So it doesn't make sense to take half off when it breaks down through support. Okay, in a moment, I'm going to show you a way how you can automatically find stocks exhibiting these patterns. And then finally, my favorite indicator is stochastics. It's called stochastics oscillator. As with other oscillators, it helps pinpoint overbought and oversold price situations. Don't let all the squiggly lines confuse you if you're not familiar with this indicator. If you want to know the calculation of it, again, you can Google it for sure. You'll get everything you need to know. The calculation is quite tedious, but I'm just going to, again, teach you how to use the indicator. On the lower end, so stochastics oscillates between 0 and 100. On the lower end is equivalent to 20. That is the oversold area. The overbought area is when stochastics goes above 80. I'm only going to talk about the oversold areas today and the buying opportunities today. So would you agree that when stochastics goes below 20, that you're near a good buying point, right? You're near a low. You're near a good buying opportunity, okay? Yes. Now, just because stochastics goes below 20 doesn't mean that you run out and buy the stock. That's not your trigger. The trigger is when the stochastics oscillator goes from below 20 to above 20. That's your signal. Now, I know here we're looking at an uptrending stock, aren't we? So earlier I said that you can mix and match indicators to different types of market environments. So what I would say is never mix and match, never use the MACD. I wouldn't say never. Look, we're trying to improve our odds and apply the ideal indicator to the market that we're in. The ideal indicator to use in a trending market is the MACD. I don't know if you guys have ever tried to use the MACD in a channeling market. It's not fun, right? It gives a lot of false signals. It gives a lot of whipsaws. Okay, so that's why we want to try to only focus on using the MACD in a trending market. We can mix and match the other two indicators. As you can see, stochastics works very well in a trending environment. You may not think that this is an oversold situation or this was an oversold situation. And I said earlier that technical indicators help us make better sense of price than what are able to do with the naked eye. So you may not think that this is oversold, but stochastics tells us it is. Okay, so let's just look quickly here. Stochastics crosses from below 20 to above 20. Now with stochastics, you're getting in much closer to the lows, as opposed to the MACD, where it takes a little longer for the MACD to generate a signal because of the fact that we need that meaningful change in trend. You're getting in a couple of days, most times, off of the lows. Okay? Now, let's mix it. Let's kind of go through an example here on how to manage a trade. It could be this one, it could be any trade. It's actually what I'm about to go through here are some guidelines that we have laid out. Steve Chaplin and I, Steve is the director of trading systems development. We've laid out some guidelines in our swing trading coaching group that he and I facilitate. And some of the guidelines are as follows. So here we have not only a stochastics crossover, right? Stochastics crossing from below 20 to above 20, but we have what's called a bullish harami. This is a bullish reversal, a candlestick reversal pattern. So you're in an uptrend, right? The stock pulls back. Now, I would even consider that oversold, even if I didn't have a stochastics on the chart. That was a really sharp, violent crash there. However, you saw a bullish harami pattern. That's a bullish candlestick reversal pattern with an oversold stochastics. You had follow through of that bullish harami the following day. A couple of days later, 1 day later, you had stochastics crossing above 20. Good buying opportunity. That's a really good buying opportunity. One of the guidelines that Steve and I have laid out in our coaching group is to take action at the most recent high, at the most recent swing high. So I look at this, and I'm big into candlestick analysis. I look at the most recent swing high, and I see these long upper wicks, right? Long upper wicks aren't bullish, during an uptrend. It indicates sellers are pushing the price well off of the highs of those sessions, nearer, closer to the lows. In an uptrend, that's not bullish. In an uptrend, you want closes closer to the highs, right? Well, that's not what we saw here, and then saw here, and then we saw a really violent crash. So that area on the chart is where I would look to take gains off the table. Price reached that level. So what we've been doing, Steve and I and a lot of the members of the coaching group, is we take half off. We take half off. So you take half off here, and essentially what happens, look, I would love to take half off at the most recent high and for the stock price to continue to bust through it, right? But that didn't happen here. It fell, it retraced. What is that essentially now? So what do we have established here as price fails to make a new high and breaks down, moving lower? That's resistance now, right? Okay, so we exited either half the trade or the whole thing, and the stock continued to fall. We know we're able to get back in. So here, stochastics goes below 20, crosses above 20, and what we're establishing now is support, right? Because we're not making new lows. Essentially, the stock stopped at the same level. It's more of a zone as opposed to the exact price point. Stopped at the same level that it did back here, establishing support. So you have not only here, you can see a doji on the following day, the day after my date line. You have a retracement off of support. You have stochastics crossing from below 20 to above 20. Yeah, that's a buy signal. And then what happens the day after you enter the trade? The stock crashes, right? Big red candle. And you say, man, what do I do? Some may have panic sold, right? But hopefully you're better equipped and better understand how to manage trades, especially if it's a trade that you take off of a support retracement. Why do I say that? Because you know from um, our support and resistance segment a few minutes ago that if you're in a long position and price breaks down through support, that's when you should sell it, not when it reaches support like it did the following day after we bought it. It got to support, but it never broke through it. It actually retraced from it on the following days. So you're managing the trade a little bit more efficiently. So the stock retraces, you almost get back to break even, and you say, okay, that was a good decision not to sell, not to panic sell there as price crashed on me the day after I bought it. But then what happens now? So okay, we get another retest. So you think you're in the clear, you're about break even, and now the stock retests support again. And you see that long lower wick right there? That's called a hammer. That's a bullish reversal pattern as well. Long lower wicks at support in at the end of a down move, that's bullish. We got good follow through the next day, and then the price took off from there. So we weathered a couple of storms, being a little bit more reasonable and prudent on our exits, not just panicking because the stock goes down on us. We have levels on the chart that help us manage the trade. Now, that resistance level that we sold before, that just doesn't go away. So price continues to go up. We want to make sure that we take action at the most recent swing high, either taking half the position off. Okay. And we pulls back off of that same level that it retraced from twice before. Okay, you can take half off, you can take the whole thing off, you can just tighten up your stop on the entire position. The point is, the guidelines are to take action, do something. Okay, the stock pulls back. Now it doesn't fall all the way back down to support. Okay, it doesn't fall all the way back down to support. But stochastics goes below 20, crosses above 20, giving us another entry. Resistance is still there. So price rises, it reaches resistance, and then you can see that big red bar. That's where I'm going to exit. Either take half off or you take the whole thing off. And I know what the stock price did afterwards. I'm not going to sit here and tell you that I would have held through that red bar, because that is a retracement off of that resistance level. It's the same retracement that we saw here. Even though stock price didn't continue to fall, it still retraced sharply from that resistance level, causing you to take action. Then eventually, a couple of days later, the price busted through that resistance level. All right. Many times, what will happen after price breaks through resistance? It's going to come back down to retest that zone. That resistance level becomes support once price breaks above it. So as you can see, price came back down to retest that zone, retraced, retested, eventually retraced again. That retracement coincided with stochastics going from below 20 to above 20. Okay, so that gave you another buying opportunity. So support retracements along with stochastics going from below 20 to above 20, good buying opportunities, really solid signals. Okay, now we're back into an uptrending environment, right? We break through, looks like we're hitting higher lows now and higher highs. New high here, October of 2018, pullback. Stochastics goes from below 20 to above 20. We buy only to see the stock fall now, but we're keeping a tight stop right below the swing low that we entered off of, knowing very well that we're going to get a better opportunity along the way. So here we had stochastics crossing from below 20 to above 20. Now, unfortunately, we're not trending anymore, are we? Right? This rally failed to make a new high. This retreat failed to make a new low. Okay? So we're kind of moving back and forth between support and resistance again. Here's a good buying opportunity. Stochastics goes from below 20 to above 20. We buy, only to see the stock pull back sharply, crash on us, One retracement, two retracements, three retracements. Same zone, three touches. That's support. So now that we're in the trade off of the stochastics crossover, the stock falls violently for 2 days afterwards, but it stops at support. It doesn't break down through it. And we are more aware of that level now so that we're better able to manage the trade. And as you can see, price retraced from that support level, and then we were off and running. Okay? All right, so finally, how are we going to find these trades? I just kind of went through the application of the indicator, how to use the indicator. And you can find trades using what we call the one-by-one method. Okay? This is where you look at chart after chart after chart to identify these crossovers. For example, you're in an uptrending market. Okay? You now know how to recognize an uptrending market. And let's say you're in VectorVest and you want to go through the S&P 500 watch list. You're like, all right, I want to buy stocks from the S&P. We're in an uptrending market. I want to focus on S&P 500 stocks. You graph them all. You throw the MACD at the bottom of the chart, and you go through them. And you're looking for a MACD crossover today, right? You're looking for the histogram bar to cross today, not a week ago, not 2 weeks ago. You're looking for that initial crossover, that first indication of the change in trend. You can do it the one-by-one method. Very, very tedious. I don't know. I don't mind looking at charts, by the way, but I want a faster way to get there. And that's by using a scan or a search. Okay? Meaning you have a scanning tool. You have a tool that will help you look for stocks, search for stocks that are meeting the stochastics crossover today, or searching for stocks that price is retracing from support today, not a week ago, right? Not 3 days ago or 4 days ago. You want that initial retracement. You want to find stocks that are crossing stochastics that are crossing from below 20 to above 20. You don't want to find stocks that the stochastics crossed from below 20 to above 20 4 days ago, and now stochastics is like at 50 or 60. You missed the turn. You want to be able to find those stocks quickly, and scans do that. Then once I run a scan, then I'll look at the charts. All right, because there's some cherry picking that's involved, but you need a faster way to get to your stock selection other than going through the charts initially. You want that scan. And then finally, there's using automatic alerts. Okay, automatic real-time alerts. So again, the one-by-one method, you can have a list of stocks. Maybe it's just a list that you like to trade, same 20 or 30 stocks that you like to trade. You have to go through them all to identify the crossover, or the signal, excuse me, whether it's using the MACD or support and resistance or stochastics. But you want to recognize what the market's doing first. Within our VectorVest real-time program, we have a tool called Pro Trader. It scans for such things as moving average crossovers. It scans for MACD crossovers, both bullish and bearish. It scans for stochastics crossovers. It scans for all four of the situations that we talked about using support and resistance. It'll scan for price breaking resistance or breaking support, whether you're bullish or bearish on the market, or breaking support, retracing from support or retracing from resistance, again, depending on whether you're bullish or bearish or not. Then another tool that we have within our real-time program is called the Watchdog. The Watchdog is a real-time alerting system where you set it up once. So I have a lot of Watchdogs set up, right? So I have a Watchdog set up for bullish MACD crossovers on stocks in the S&P 500 that are above $5 that have an average volume greater than 250,000 shares. And here are my alerts today. I got a couple of alerts. Fox, Zion, right a little bit after lunch, 12:43, 12:48. At those times, those stocks met the criteria of a bullish MACD crossover. I get an email, I get a text message, and I'm there to make the trade in real time, as opposed to waiting for the end of the day or having to just run a search. Okay. So you showed up today. I'm going to take a few guesses as to why you guys are here today. You feel like you're missing out on the current market. You know, within the VectorVest program, let me actually show you real quick. Whoops, where am I? I'm going to show you guys something real quick. Within the VectorVest program, just recently, the market has rallied. I know we're kind of a little bit underwater today, but recently the buy to sell ratio, remember that indicator I told you earlier, got to below 0.20. And the explosive rally occurred the next day. So we were, you know, our subscribers who were paying attention were able to get back into the market on September 25th after the market hit an extremely oversold level. And we've had a nice run. You know, we're actually almost into positive territory today, but we've had a nice run off of that low point. Okay, so hopefully you're not missing out on the current market, or you never get into a situation where you miss out on any market environment. You have to be there. You have to put yourself in position to take advantage of anything that the market throws at you. Maybe your trading plan isn't performing like you want it to. And maybe you just want a better, faster way to find trades. Maybe you're someone that does the one-by-one method and you're sick of it. You want a better, faster way to find trades. So today you learn to match the market to your indicator. You learn to recognize that the market can do one of three things. It can trend, it can channel, and it can hit an extremely oversold situation like it has recently. And you also learned which indicator is ideally suited for that market environment. I taught you how to effectively use a few popular technical indicators. I didn't teach you 4 indicators for each market. That'll equal to 12. It's too many to start. You know, you can kind of grow your technical indicator library along the way, but one at a time is fine. And then I taught you today also learn how to quickly and easily find trading opportunities. So the big lesson today, technical analysis can help anticipate, there's that word again, future direction, and you can find some great trading opportunities, especially if you use the power of speed. So some of you might be new to technical analysis and you're saying, this looks pretty interesting. This is kind of what I've been looking for. How can I get started? You have a choice. You can do it the slow way. The slow way is by yourself, okay, using the one-by-one method. That's the slow way. Or you can do it the fast way. So within our VectorVest real-time program, the one-by-one method would require you to go through the charts, not in the real-time program, but the one-by-one method would require you to go through the charts. Within our VectorVest real-time program, we have pro trader searches. Those are the searches that identify MACD crossovers and stochastics crossovers and support and resistance and ADX and RSI and so many different technical analysis indicators. And then the other tool that we have within the real-time program is called the Watchdog. This is your real-time intraday alert system where you don't even have to be in front of your computer for the alerts to be sent, okay? You just have to set it up. You set up the Watchdog once, you'll get alerted via email or text message when any of the crossovers or the situations occur. So within the real-time program, fundamental and technical charting, you get market timing signals for clear entries. Those pro trader searches, which are those technical analysis searches, you get the Watchdog with instant alerts. You get a tool that we have, which I love. I use it to manage my portfolio, called the Genius. It's an automated portfolio manager which gives you alerts as well. Within the real-time program, you also get pre-built trading systems and, of course, real-time streaming data. Now, we sell the VectorVest real-time package for $137 per month, but I want to give you guys an opportunity just to try it out. For 30 days, it's $9.95. It includes everything that I talked about today, plus a lot more. What Ray has done is he's typed in that address that you guys see at the bottom there, www.vectorvest.com/capture-trades. Okay. Also, what I'm going to throw in here, guys, is a checklist. It's a stock buying checklist. This is great for those of you that like to be a little bit more hands-on with your trades. You know, you'd like to keep a log. And this checklist helps you follow all the rules that we discussed today. Okay? Um, this is 30, we have a 30-day money back guarantee. If at the end of 30 days you say, you know what, I don't like the real-time program, I want to go back to my end of day version, VectorVest end of day or VectorVest intraday. Maybe you're currently a subscriber to one of those services. Maybe you just have the mobile app. You take out the trial for 30 days for the real-time program for $9.95. At the end of the 30 days, you say, this is not for me. I'm okay with the end of day or the mobile app. We'll give you your $9.95 back. That's no problem, no questions asked. Okay. All right. So what I want to do now, guys, take a few minutes here to answer some questions that you guys have. Oh, let me pull this over. I want to thank Ray for being here and answering a lot of your questions. I really appreciate it, Ray. So if you guys have any questions, now is the time to ask. Anything that I talked about today or anything about the real-time program. If you're a current real-time subscriber, email me at jerryd@vectorvest.com. JERRYD as in David @vectorvest.com. If you're already a real-time subscriber, I will send you the checklist, because again, that checklist will be given to those who take out this trial, right? So if you're already a real-time subscriber, sorry, unfortunately not eligible for the trial, but I will send you the checklist. Okay, I'm trying to put the 3 techniques. There we go. Nope, that's not doing it. I'm trying to put the slides in the chat box, guys. There we go. You should see it in a second. It says 3 techniques. It's a PDF. You should see it now. Okay. Okay, Clyde says, hello, I don't see how you could have established that trend retracement zone at the time of the trade. Well, when the price stopped falling at the same level that it stopped falling previously, that's how you establish that level. If it broke down through it, then that's not a support zone. The support zone is established by price falling to the same level that it stopped at least one other time in the past. Okay, so that's how we were able to establish that. Well, number one, too, because remember, stochastics crossed above 20 and we entered the trade. We now know where that retracement is, right? So if you enter a trade and you look back a few days and you say, well, 2 days ago was the low that I just entered off of, does that low coincide with any previous lows? And it did. Okay, you guys have to email me, guys. Those of you who are saying, please send me the checklist, email me, jerryd@vectorvest.com. I will reply to your email with that checklist. Okay, JerryD, JERRYD as in David, @vectorvest.com. JERRYD as in David @vectorvest.com. And if you're not a real-time subscriber, and you take out this trial, feel free to email me as well. You know, I work very closely with the real-time program. I'm a avid swing trader. So if you have any questions about the real-time program at all, anything at all about technical analysis, please feel free to email me as well. It's jerryd@vectorvest.com. All right, guys. Any other questions about anything that I talked about today? What is the market doing? Let's take a quick peek. Oh, all right, we're rallying a little bit. Dow's only off 29. Man, NASDAQ getting crushed, down 223, almost 2% today. S&P down only 21, a little over 0.5%. And our VectorVest composite's only down about 7 cents. So it looks like we're rallying again. Hopefully we can kind of get in positive territory here by the end of the day. Alex says, which slides can we email you on again? The checklist, Alex. So, Alec, if you're a real-time subscriber, you're not eligible for this trial, but I will email you the checklist that we are offering as part of this trial. So it's a checklist. Your end of day, great. So if you take out the trial, $9.95 for 30 days, you'll get that checklist. So there's nothing that I will need to email to you once you sign up for the trial. You'll automatically be given that checklist in an email. Okay, but the slides that I used today are in the handout section of your GoToMeeting control panel. So in your GoToMeeting panel, you should see it says handouts. It's a PDF called 3 Techniques. All right, everybody. Well, happy Friday again. Hope you guys have a great weekend. Look forward to working with you folks. So again, if you have any questions, shoot me an email. On our website is our support phone number. If you have any questions, you can give our support department a call as well. Sanjay's asking, hi, just wondering if we can use one technical chart, one type of technical chart. I'm not sure, Sanjay, what that means. Can you rephrase that? So I'm not sure I understand what you mean by one type, one technical chart. Oh, good, Alec. That's good. Alex says, thanks. I'm trying the options jumpstarter program and trying to focus on both intraday trading and our option trading. Good, good. That's good. Good, Nancy. I appreciate that. All right, guys. Let's see. I'm just waiting to see if Sanjay wants to rephrase that. Bella says, do you use... Okay, that's fine, Sanjay. Do you use 5-minute or 30-minute what to find stochastics entry? I don't day trade. So what I was showing you, Bella, was end of day charts, daily charts. So I'm looking for the daily crossover. So as of the close of a particular day, is the MACD histogram, did it just cross bullish at the end of the day? Then I will enter the trade the following day on follow through. So I'm not looking at 5-minute crossovers or 30-minute crossovers. I'm looking at daily crossovers. If you use 5-minute or 30-minute, you're probably day trading, which I don't do much of. All right, folks. Have a great weekend. Look forward to working with you. Stay safe, everybody. We'll see everybody soon. Take care, folks.